So good afternoon, all. I'd like to welcome you to our USDA webinar this afternoon on the Business and Industry CARES Act program. My name is Mark Frudzinski. I'm currently serving as the Acting Administrator for Rural Business Cooperative Service. And our agency is basically heading the Business and Industry program in the CARES Act funding. So we would, again, glad to welcome you to our webinar today. We see that there are a few yet still logging in, so we'll have a little introduction phase here and kind of welcome you to the session as others finish connecting with our webinar this afternoon. What I'd like to start off with is welcoming a special guest, our Rural Development Deputy Undersecretary, Betty Brand, for some opening comments and support for all of our rural business activities. So Betty, please, over to you.
Okay, thank you so much, Mark. I appreciate the warm welcome, and I really am glad to see so many lenders, or hear so many lenders that are joining us today. Many of you probably already know about our programs, but probably there's some of you who are new to rural development programs, and so we're really happy to have you here with us today. As well, we're very happy to have some agricultural producers, some producers that would be eligible, and so we do look forward to the days when we can come again together and meet in person. But in the meantime, we're happy that the technology enables us to get the job done, and we are getting it done for you and for all our customers in rural America. For those of you on the lending side who are already a part of the rural development family, you're familiar with how we support the economy and the quality of life in America's small towns and farming communities. But some of you on the production side may be new to rural development programs, so I want to give you a special welcome and a quick 30,000-foot view of the work we do. Our mission is to help improve the economy and the quality of life in rural America through financial support and investment in business and economic development, community facilities, housing, and infrastructure, which includes water, electricity, and broadband, all very important to our rural communities. This new loan guarantee under the B&I CARES Act directly supports this mission. And as Secretary Perdue said in his announcement last week, providing this much-needed capital in these unprecedented times is a cornerstone of our commitment to all aspects of the rural economy. So on behalf of the rural development team, I want you to know that we will work tirelessly beside you to put this critical funding to work as soon as possible. Together, this work will result in over $1 billion in loan guarantees leveraged to positively impact our rural economy. I know how much your communities need this help. Most of us who work for rural development either live in or grew up in the areas we support. We take our work personally, and it means a lot to us. So this is a very challenging time for our country, and your federal government has taken unprecedented steps to help Americans through this economic devastation of the COVID-19 pandemic. The CARES Act did not forget rural America, and I commend Congress for channeling this critical support through our office. It is what we are made to do. So now I'll turn things back to Mark and the team to dig into the details, and thank you for having me with you today.
Very good. Thank you, Betty. Kate, do you want to walk through a little bit some of the housekeeping, speaking of the chat box and other housekeeping efforts here?
Absolutely. Thank you, Mark. And we are glad to have each of you join us today. You've entered this webinar with all participant audio lines muted. We do encourage you to ask questions throughout the webinar using the chat box. It is located at the bottom right of your screen. We will pause occasionally to address those questions, and we'll close with a Q&A session. Within 48 hours, you'll receive an email with the link to access both the webinar recording and the PowerPoint. So thank you again for taking time to join us, and back to you, Mark.
Very good. Thank you, Kate. All right, so our agenda today, we're going to try to do is focus a little bit of a touch on our broader Business and Industry Program, just a quick overview of some of the program, but we're going to spend most of our time this afternoon talking about kind of the special features of what we're referring to as the Business and Industry CARES Act program. And as we speak, we're going to use those two terms really to differentiate the two. By two terms, I mean the Business and Industry Program being our standard program, and the B&I CARES Act program being the new funds that are available through the CARES Act, which we stood up as really as a separate program from the B&I program. The CARES Act program is based on the foundation of the B&I, so you'll hear us kind of cross-referencing between the two a little bit as we walk through the program overviews. We're going to kind of wrap up with a little bit of conversation about the application process for those that are not familiar with our business industry or the rural development programs, and talk about our resources as additional resources to help support. If there's some questions you have after today, or if you need some technical assistance understanding the program or processes as we go forward. We know our audience today is pretty broad. As we're kind of monitoring some of the questions coming in, we're already seeing some questions from I think some of the names and some of the lenders that we recognize as being active in our programs and B&I program. But we know that we also have a large number of lenders that are not active in the B&I program or are also lenders or borrowers under the ag production programs. So we're glad to welcome you to this webinar. We're going to do our best to always talk a little bit on the foundation side of the programs to make sure that we're not diving too far into details, but giving you a good understanding of how the programs and processes work as we go forward. We're going to be trying to monitoring the questions as we go through just to get a sense of kind of what is being understood or where the challenges are as we talk. So we'll be glad to continue monitoring and addressing that. We also have a couple of guests available for answering questions from the Farm Service Administration. We'll be talking a little bit as to how our B&I CARES Act program can supplement or complement some of the FSA programs. So if we have questions or discussion that we need some expertise from FSA, we also have them on the line with us to help with that. Okay, so for a little bit of background on the B&I program itself, the Business and Industry Program, so again, this is our standard program, has been around now for, if I do my math right, about 50 years, starting in the early 70s. The program itself typically provides guarantees for longer-term financing. Usually it's financing for real estate improvements, buildings, equipment, machinery. The program does provide working capital and operating funds, but usually that is a kind of a small part of the program. We're using that program as our foundation to stand up the Business and Industry CARES Act program, but we're making modifications to it, and that's where we're going to spend most of our focus today, are talking about where those differences are. And the major difference is that for the B&I CARES Act program, we're limiting that the loan proceeds can be used only for working capital purposes. So the more traditional purposes of the B&I program, such as machinery, equipment, longer-term financing, would not be eligible for the B&I CARES Act program, but we could at the same time work with both programs. So a business or a lender yet still could apply for the standard B&I program for the longer-term equipment, real estate type financing, and could apply for a B&I CARES Act program, a loan for the working capital needs simultaneously. The B&I program itself, again, the standard program, really is available from a business perspective of really any business structure. It could be a for-profit, nonprofit, a cooperative. We do have loans to Indian tribes, to tribal governments, tribal organizations, and a couple to public bodies, public entities are also eligible for the program. On a for-profit basis, it could be a publicly held, publicly traded company. We have some larger companies in the program and some smaller companies in the program. One of our differentiating factors from the B&I program compared to other government programs such as SBA is that we do not have size standards. So we've worked with all sizes of businesses in rural areas. But the key factor is that a business must be located in a rural area for us to be eligible for the B&I program. And that also carries forward for the B&I CARES Act program. From the lender perspective, eligible lenders basically are lenders, banks, credit unions, farm credit, basically lenders that are chartered and under the supervision of a federal or state agency. Automatically eligible, we do not have to go through an approval process or an application process for a lender. Simply submit a project application, and as we're reviewing that project application, we'll qualify and record the lender and enroll the lender into our programs. We do have some avenues for non-bank lenders, basically non-depository type lenders, to also qualify for the program, but non-depository lenders do need to go through an application process that most banks would not. Okay. As a quick overview of our B&I CARES Act program, the program is assisted by about $20 million, $20.5 million of basically it's subsidy support from the CARES Act. This was passed back in March. As part of that act, Congress told us they expected that program would support about $1 billion of lending authority. They made the funds available through fiscal year of 2021, so a little over a year and a half that the funds would be available. Now, if the funds are utilized, of course, prior to then, we'll have to basically close the program, but they're available up to, but not to exceed September 30th, 2021. To stand up the program, we published what we're referring to as an interim final rule. So basically, this is an add-on to the B&I program, additional rules that we published. These are published in the Federal Register on May 22nd. We'll show you a link, as if you don't have those handy, as to a link as to where to obtain a copy of the additional rules. We published the rules as an interim final, meaning that they're available for public comment. So if any of you are interested in making comments, either on what's in the rules or what's not, any changes or concerns that you have regarding the rules that were stood up for this program, we're accepting comments up for 30 days up through June 22nd. And again, if you, at the end of this, we'll show you a link, and that link will take you to a way of making comments and entering comments on the interim rule. At the same time of publishing the rule, we also published a notice announcing applications, that applications then now will be accepted in this program. A couple of quick highlights. Today we're going to walk through, again, the changes, kind of what differentiates the B&I CARES Act program from the standard, kind of the regular program. This slide here just highlights about 7 kind of the major areas. What I'm going to do is just take a quick run through, kind of a high-level approach on these, and then I'm going to introduce 2 of our subject matter experts on our team to walk through a little more of a refined detail to each of these. As I mentioned earlier, kind of the first bullet on this list is that the primary difference between the B&I CARES Act program and our standard B&I program is under the CARES Act, loan funds are limited for working capital purposes only. Generally, if you think of working capital purposes, we're talking about business operating expenses, but it also includes principal and interest payments on loans. So a principal and interest, principal payment would normally not be an operating expense, but we are including that as an eligible purpose within the B&I CARES Act program. The program will offer guarantees on commercial loans. The guarantee will be a 90% guarantee for all loans, all loan amounts. Our standard program has basically some tiers, different levels of guarantees for different size or amounts of loans. This program does not, so it's a 90% for all loans. And we have a guarantee fee. So the guarantee fee is 2% of the guaranteed portion. That is due to the agency when we issue the guarantee. So basically at loan origination is when the guarantee fee is paid. The guarantee fee is, think of it as, in essence, an insurance premium helping us support the program. As I noted earlier, Congress expected the program to help support about $1 billion in loan activity, and this guarantee fee will help us maintain that program level to help the program serve more clients throughout our rural communities. We talk about a new eligible purpose for the program. For my third bullet here, the B&I program standard program has been expanded via the CARES Act program to also serve agricultural production. So normally, the B&I program would not enable loan funds to be used for ag production as a sole purpose, but under the B&I CARES Act program we do, but we have some restrictions on that, and we'll talk about that in a little bit more detail. We also extended the loan terms under working capital loans. Under our standard program, a working capital loan is limited to a 7-year repayment term, but under the B&I CARES Act program, we extended that to a 10-year term to provide a little more flexibility in scheduling repayment on these loans. We are also deviating from our standards on how we would test for an equity or a capital requirement for businesses. And we'll walk through a couple examples with that, trying to, again, ease the eligibility a little bit for the businesses for this program. We are also kind of modifying the collateral requirements for loans under the CARES Act program, and we'll go through the details there. But basically, we're allowing that the program could lend up to 100% of loan to value under the B&I CARES Act program. And last, we are also modifying the maximum loan amounts. Our standard loan amount under the B&I program of $25 million generally would need to qualify for amounts over $10 million. So loans under the standard program between 10 to 25 require some qualifications of priority. Under the B&I CARES Act program, we do not have those requirements. So simply, the maximum loan amount is $25 million at the absolute maximum. But we'll walk through a couple of examples here of how to calculate the amount of a loan that the borrower would qualify for. Again, just to highlight a couple of the provisions, we're extending maximum terms to a 10-year to allow some flexibility. Terms could include deferral of principal payments for up to 3 years, could defer interest. In other words, not pay interest for the first 12 months, but interest payment is due. The first interest payment has to be due 1 year from closing, loan origination, but some flexibility there on scheduling principal and interest payments. And again, just to emphasize that the purpose of the loan is for working capital purposes. Just listing through those, and we'll talk a little bit further detail. Again, just to highlight, the program provisions are a 90% guarantee. The 2% guarantee fee is, again, paid at closing or loan origination. And we also have what we refer to as an annual renewal fee. So this is a fee of 0.5%, 50 basis points, that is charged on the unpaid principal balance each January 31. So it's once a year, again, a renewal fee for that guarantee over the life of the loan. And that's a set fixed amount or fixed rate going forward. Okay, so I'm going to turn the rest of the program over to 2 of our subject matter experts. Dave Chestnut. Dave is our branch chief of our program management branch. So Dave is basically leading development of the regulations, instructions, the provisions for this program, and helping document and roll that out. And then also we have Aaron Morris joining us. Aaron is the director of our processing division. So basically the key of our team, leading the team that work directly with projects with our lenders, and basically reviewing of projects rolling forward. So between Dave and Aaron, we're going to talk a little bit more about the details of the provisions of the program, but also talk about the processes kind of rolling forward in regarding the program. All right, so I'm going to turn over. Let's well, first, let's take a pause. I think have some of my team are kind of monitoring the questions coming in through the chat box. Are there any general questions that we want to cover at this point, or should we move on to Dave and providing details? Aaron or Dave, do you have a sense on questions?
Hi, Mark.
No,
go ahead, Dave.
No, Aaron, it's yours.
No, I think a lot of the questions we're going to get to in our presentation.
Okay, very good. All right, so why don't we let's switch over to Dave Chestnut. You want to take over on a little more detailed discussion on the program provisions. Thank you.
Right. Thank you, Mark, and thank you everyone for joining us this afternoon and or morning if you're in our Hawaii or Alaska purviews. But we do thank you, and thank you very much for your interest in the B&I program. It means a lot to our rural communities as we go forward and make them more prosperous through these challenging times. As Mark mentioned, eligibility, a legal entity is an eligible borrower, including sole proprietors. Independent ag producers are eligible if their loan request is not eligible for FSA financing. And we can assume that most of our ineligibility of that purpose is going to be that the borrower, the ag producer, will exceed the FSA's $1.776 million loan limit. So we're going to look at FSA agricultural production purposes, but they come in, they have to be ineligible. That will be determined pretty much. We don't think that that's going to be a hard level to crack over, especially for someone who already has FSA debts that are over there. We also, if, for example, if an agricultural producer needs $3 million of working capital expenses to get through the economic crisis, we know that that loan is not eligible for FSA financing. One of the important factors here is that the applicant must have been an operating business as of February 15th of 2020 to be an eligible B&I CARES Act borrower. So that is a threshold that has to be met. It doesn't matter how old the business is as long as they were active and operating on February 15th of 2020. Loan purposes, as Mark had alluded to, is working capital loans only. Working capital expenses and used to cover a business's working capital costs to prevent, prepare, and respond to the coronavirus pandemic. This is working capital to get a business essentially from where they are now to full production or whatever their new normal is going to be for operating as a successful and sustainable business. So we know that many businesses have a challenge right now due to either not opening or opening on a limited basis. We want to be able to assist businesses get from where they are now to where they need to be continuing as a successful business. Eligible uses, again, Mark went over wages, salaries. Routine maintenance in here may include additional or specialized cleaning supplies to deal with the virus. Working capital purposes include B&I CARES Act program funds to make their loan and lease payments while they financially recover. This would include and may include their existing B&I, SBA, or FSA loan payments, but it does not include any payments to any owner or affiliated business debt. Essentially, the B&I CARES Act program loan funds should keep a business current in their obligations while they transition from a current status to a fully functioning and profitable business. We include rent payments, payments on leases, routine maintenance, and principal and interest payments. Principal and interest payments would be those payments that they have existing and going forward. So they will include, if you have equipment loans or real estate loans, you need to estimate what those expenses are, but the B&I CARES Act program will cover those working capital expenses. These are more eligible uses. Please note that production agriculture expenses for seed, feed, and fertilizer are included, and additional expenses related to the coronavirus, such as personal protective equipment like masks and gloves for the employees, or even plastic shields that are inserted and injected into the workspace for health reasons would be an eligible working capital expense under the B&I CARES Act program. Because the B&I CARES Act program loans are for working capital, any fixed assets are not eligible. They are an ineligible purpose, so we cannot acquire businesses. No land, buildings, or equipment can be funded by these loans. That includes no fencing for grazing, no pasture fencing. Debt refinancing is very limited only if the loan was closed after February 15th, 2020, and also was used for working capital expenses. So this could possibly include an SBA PPP loan if the borrower wanted to extinguish that debt. All other ineligible purposes and types that we have in our B&I program, which is under Section 4279-117, those are also in effect for the B&I CARES Act program loans. The loan limit's $25 million. This is the aggregate amount of all B&I loans to one borrower. The B&I CARES Act program loan amount is for the forecasted amount of funds that a business needs to recover from the economic impacts of COVID-19. We're not stating a time period of how long that recovery can be. It may be a year, it may be shorter, it may be longer, but what amount is needed to cover a business's working capital needs until their revenues recover and the business is again sustainable and profitable. Lenders on the line, and the lenders will likely need to assist a business with this calculation on what revenues are needed, what revenues are they expected to receive, and what are the working capital expenses while the business does recover. Also for lenders, we do not require that anyone who has an existing loan use that same lender for a B&I CARES Act loan. So any lender is eligible for the B&I, that is eligible for the B&I program, may submit an application for any borrower. There are two calculations that are important. As shown here on this slide, the maximum loan amount eligible for B&I CARES Act program is 12 times the average monthly working capital expenses of a business. We then deduct the amount of any SBA PPP loans or other federal assistance that's been received by the business to cover working capital or COVID-19 expenses. Essentially no double dipping on federal purposes to get the business through the COVID pandemic. This is the maximum loan amount under the B&I CARES Act, but it's not necessarily, it doesn't necessarily have to be the amount that's borrowed. The second calculation is the most important, and it's on the previous page, which says that a loan shall be based on a cash flow analysis and must not be greater than the amount needed to cure problems caused by the COVID-19 emergency. So in essence, what amount do they need to economically recover and get back to their normal business operations? The B&I CARES Act funds are a supplemental loan to cover expenses that their current revenues plus any SBA PPP, insurance, or other resources are unable to meet. If a business does borrow less than their maximum eligible amount, and then things change, such as their projections miss the target, they can come in and request a second B&I CARES Act loan, so long as the total of their loans do not exceed the maximum eligible amount per the average working capital calculation that I mentioned before. This slide, we have a maximum loan amount calculation. You can use an average of working capital expenses, and hopefully it'll be the last 3 full years, which will get you through 2019, and then subtract any PPP loans or other disaster assistance to get to what we call the maximum eligible B&I CARES Act loan amount. Again, the business does not have to borrow that amount. They only should borrow what they need to get through the pandemic. If the borrower has not been in existence for 3 years, or has a mix of tax returns and GAAP statements available, this is where we need lenders to take the most reliable information available and determine exactly what the average business working capital expenses are. Repayment terms: all loans must be a draw note with funds dispersed in accordance with the business's working capital needs. We are not going to allow a full disbursement of funds at loan closing and then have the money held into an escrow account. The business should have a demonstrated need for the amount of funds drawn at loan closing and throughout the loan term So after loan closing, they should only draw the remainder of what they need and available as needed, hopefully through a monthly communication with the lender on what their business needs are, so that you may monitor them as well on their track back to being a successful business. With this, the lender should have the capacity to hold the guaranteed loan in their portfolio. All loans will have a maximum 10-year maturity, and like all B&I loans, balloon payments are not allowed. We do allow a deferral of principal and interest for 1 year, and we'll also allow a deferral of principal payments for up to 3 years, but the loan must fully amortize by its maturity date. So if a business were to take advantage of the full deferral, they would have an outstanding balance at the end of 3 years that is equal to the amount they borrowed, and that amount would then have a 7-year amortization. At the time of application, the lender should let us as the agency know what the loan repayment terms are, including the terms of any interest or principal deferments. The interest rate on all B&I loans, the regular B&I program and the B&I CARES Act program, the interest rates negotiated between the lender and the borrower. The agency will concur in the interest rate terms being offered. The interest rate can be a fixed rate or a variable rate, but the interest rate cannot adjust more frequently than quarterly. Loans must be adequately secured. This means that the collateral value must be equal to or greater than the loan amount. But please note that there's no discounting of the collateral value for a B&I CARES Act loan. We will accept junior lien positions, but again, there must be adequate equity in the asset's value to secure the B&I CARES Act loan. Inventory and receivables will be valued at the current balance sheet amount. And again, this is different than the regular B&I program. B&I's CARES Act collateral requirements, we're not discounting any collateral value, but it should be market value. Appraisal guidelines, this is a difference from the B&I regular program as well. Appraisals of real estate and chattel collateral are only required when the amount of the loan exceeds $1 million. The B&I program, the regular program, requires an appraisal on any asset valued over $250,000. So the appraisal guidelines will come into effect if the loan amount is over $1 million. We do ask that lenders and certainly our agency staff be very COVID sensitive on appraisals and site visits. We will accept appraisals that are up to 2 years old. They still need to be USPAP compliant, but for health reasons, some interior inspections are not necessarily required if you are to go out and get a new appraisal. Equity requirements, this is also different than our standard B&I program. All borrowers must demonstrate a 10% investment in their business or the project. This is a 10% balance sheet equity requirement. That's a standard for an existing business in our regular B&I program. But note the program difference that 10% equity is required regardless of the age of the business. As long as the business was operating as of February 15th of 2020, that business has a 10% equity requirement. For lenders that are familiar with our regular B&I program, this is not a tangible balance sheet equity calculation. This is balance sheet equity. There are 3 methods to meet the equity requirement, and I'll go through those on the next several slides. Balance sheet equity. Here we want to take the total assets minus the total liabilities to determine equity. This will be off of a borrower's current balance sheet. And again, we would need a balance sheet as of the date of loan closing, but this is the total assets minus total liabilities to determine equity. Divide the equity by the amount of total assets to determine an equity percentage. Again, there's not a deduction for intangible assets to determine a tangible balance sheet equity. This is a balance sheet equity. The business may also meet the equity requirement by having owner contributed capital equal to 10% or more of their total balance sheet fixed asset amount. To determine this, take the business balance sheet fixed asset total, the fixed asset total, and add back depreciation. That will determine the fixed asset amount. Divide the owner contributed capital in the equity section of the balance sheet by the total fixed assets. If that percentage is over 10%, then the equity requirement for the B&I CARES Act program has been met. We also have an income contribution calculation. If the estimated working capital needs for the business to recover is $1.5 million, if they contribute 10% of that amount, $150,000, they've met a 10% equity requirement through a project-based financing method. So this is a calculation for that. That cash contribution can come in from additional equity from the owner or other sources, but what is their calculation of working capital needs, and are they putting more than 10% into that? Again, an equity calculation from contributed funds. This business has estimated working capital needs of $1.2 million, and they're getting total loans of $1.2 million. But if it includes an SBA PPP loan of $250,000, then there's a contribution to costs of 20%, and the B&I CARES Act program 10% equity requirement has been met. So that's a quick run through of changes, different things in the B&I CARES Act. We will say that in the B&I regulation, this is under section 4279.190. It is its own section. If anything is mentioned, not mentioned in 4279.190, then all of the other requirements of the regular B&I program apply. This relates to the rural location, eligible borrowers, ineligible purposes, standard ineligible purposes, businesses such as any illegal substances, golf courses, lines of credit. Those things are not eligible. I mentioned lines of credit are not eligible, but these loans are draw notes, and that is an exception to the program. So with that, I'm going to conclude my conversation and turn this over to our Division Director for Program Processing, and that is Aaron Morris. We may also want to pause for questions. I think, Kate, are you there as well?
I am, and I think we should pause for questions because we have quite a few of them in here. Before we do, I just want to make a quick reminder that within 48 hours, all of you that have registered and are joining this webinar will receive an email that will have a link to access both the recording of this webinar and the PowerPoint. So with that, let's take a look at what we have here. Will logging businesses and log hauling businesses be eligible for this program?
Okay, so this is Mark. I'll maybe start off with answering the questions and then kind of pass some of them over to both to David and Aaron. But for the type of business eligible for the program, yes, really any rural business, basically a legal business structure in a rural community is eligible for the program. Businesses such as logging, harvesting, as we talked a little bit here, ag production are all eligible, processing are eligible. But it could be not related to agriculture, would also be eligible. So a manufacturing business, services, hotels, any business really located in a rural community. I know maybe some of you had questions as to what's rural. We do have basically a rural identifier. Basically, it's a mapping site or software on our website. So when I get to our resources links, I'll show you where you can access that. To take a look at maps as to if you're questioning rural or rurality for a location.
Great, thank you. Does aquaculture qualify for any of these programs?
Yeah, actually, aquaculture, we would generally qualify for both the B&I program and for the B&I CARES Act program. Generally, production agriculture does not qualify for B&I. However, some specialized like aquaculture, hydroponic, nurseries, all qualify for both programs. So any business or activity that would qualify under the standard B&I would also qualify under the B&I CARES Act program. So aquaculture, yes, does qualify for both.
Great, thank you. Does a B&I CARES Act working capital loan have to be facilitated by a borrower's existing lender?
So no, it does not have to be. Obviously, it can be. We do foresee in most cases it may be the same lender. It could be a lender with already a B&I program, a loan outstanding, that is interested in working with the borrower and obtaining additional working capital on the guarantee, though it could be a different lender utilizing working capital. We talked a little bit about having and looking at FSA programs. So a lender could utilize both FSA and the B&I CARES Act program, at the same time, or the B&I and the B&I CARES Act, both those programs kind of at the same time. Could also be multiple lenders. We do have some larger projects or other activities where a lender may pick a real estate transaction or the B&I, and maybe a different lender, the B&I CARES Act for working capital. So we could combine different funding streams, different lenders on projects. Dave, do you have any other thoughts on lenders and activities?
No, I'd say lenders need to know their borrowers. They need to know the current situation of the borrower and how much working capital need they're going to have to get, as I mentioned, from here to there. How much do they need for recovery? And generally, I think part of that trick, and lenders would work around this or try to work around this. We do have to have sufficient collateral for these loans, and a lot of times an existing lender is already going to have that collateral, that piece of real estate or a lien on other assets to secure it. So if they were to go to another lender, there may be just some more validation, more documentation needed as to the collateral provided for the B&I CARES Act loan.
Okay. Thank you. Can a business obtain a $5 million B&I loan guarantee at 80% and still obtain 90% guaranteed B&I CARES Act working capital loan?
Okay. Yes, they can. But Dave, would you like to address a little bit how the two may work together?
Well, yeah, because the B&I CARES Act loans are 90% loans regardless of the loan amount. And I think that for the aggregate total, we cannot go over 25 million, but they may have an 80% guarantee on a $5 million loan and then come back for a B&I CARES Act loan. They would get 90% for that. I think, Mark, the question got to be once they've hit their 80% on that 5 million, which is our standard guarantee percentage under the B&I regular program. So I don't think we're adding the B&I CARES Act program first and then the $5 million loan on top of that. I think that's what the question was. Because, well, yeah, loans between 5 million to 10 million are only eligible for a 70% guarantee. So that is probably the basis of the question.
Okay.
So here's a high priority question. Where can the application be accessed?
Well, we're going to talk the application process a little bit here. So do we want to do that and then pick up more questions? Aaron?
Well, we can. Go ahead, sorry.
Sure. Well, Aaron, why don't you walk through your application requirements and process, and then we can come back and address both the questions a bit more on the provisions and the processes as we roll through this. So, Aaron?
Great. Thank you, Mark. Good afternoon, everyone. My name is Aaron Morris. I'm the director of our guaranteed lending programs here at Rural Business Cooperative Service. Going to go over our application requirements that we'll be having for the B&I CARES Act loan program. These loans are for working capital. Actually, it will help if I move the slide for you all to see. These loans are going to be for working capital, and they're classified as categorical exclusions for the purpose of our environmental requirements. That's the lowest standard for us for an environmental requirement. And what we're saying here is that it should require minimum documentation that you need to submit to USDA. However, based on the review of the project description, we do reserve the right to request additional environmental documentation, but we don't foresee that happening. Something that's not here on the slide I do want to mention to you all, B&I CARES Act loan borrowers that also have existing B&I loans, they don't need to resubmit their historical financial statements as a part of their application package for B&I CARES Act loan, simply because we should already have that from previously servicing actions. So we should already have that stuff on file. Next, a draft loan agreement will not be required at the time of application. Those of you who are familiar with our program know that that is a required component of the application. Not so for the B&I CARES Act program. We will not require a draft loan agreement at the time of application. A business plan or feasibility study will not be required. These businesses should already be operating as of February 15th, so we're not going to need that for B&I CARES Act. The lenders may substitute and rely on the borrower's tax returns when the financial statements prepared in accordance with GAAP are not available from the borrower. We want to make this as flexible as possible for you all, for the lenders who are helping potential borrowers. If those GAAP prepared statements are not available for some reason, we will allow you to use tax returns in lieu of those financial statements. Also, for our ag producers, as Mark and Dave have mentioned, that's a new eligible component for B&I CARES. Those financial records must meet the industry standard accounting practices. Lastly, for our smaller loans that are less than $600,000, we do have a streamlined application process in place. We encourage you, all lenders, to use that process to prepare loans faster and hopefully get through the approval process quicker. Moving on. The applications that are received will be processed in our Rural Development State Office. Someone asked how they can get a hold of the application. There's a link at the end of this presentation. I believe all of you will be able to receive it. There's a link that links to our state offices and how you can contact them to get an application. Also, that can be found on our website as well. Those applications will be received and processed in our state office. We have 47 different state offices serving all 50 states. There are a few states that share a state office, such as Massachusetts, Connecticut, Rhode Island, and a few other places. These funds will be maintained in a National Reserve account. Those of you that are familiar with our program know that we typically allocate our regular B&I funding to all of our state offices, and they're able to dispense funds to you through their allocations. Those funds will be kept here in Washington, D.C. in our national office. We are committed to making sure that when you request funds, that we're able to get those funds out to our state offices and out to you as quickly as we possibly can. That's something that we will be monitoring every single day. Next, the agency will consider applications in the order that they are received. For now, this is a first come, first served program. However, towards the end of the funding period, which we identified as September 30th of 2021, it may be necessary that the agency assigns priority points for limited funds that could be remaining at that time. And we'll do so in accordance with the regulations in our regular B&I program. Next, the aggregate total amount of loans for ag production will be limited to 50% of the total amount of program level for the B&I CARES Act program. There's a little over $950 million available for B&I CARES. So loans for purposes of ag production will be limited to half of that, so around $475.5 million. And lastly on this slide, the agency may publish future notices in the Federal Register revising the limitation of the amount of funding made available. Next up, a lender or borrower may combine applications for a BNI CARES Act program loan for working capital with an application for the standard BNI guaranteed loan program. I believe we addressed this a short while ago. Why you would do this, of course, for different purposes. One, of course, is for working capital only. Another, the regular BNI program, could be for the purchase of real estate or the other provisions that are allowed under the BNI, the regular BNI program. It's important to note that the provisions for each are different, and so with each pot of funding, if you're going to combine an application or have two separate applications, the loan purposes and the borrower need to meet the provisions of both programs. With that, I'm going to end my comments, and we will turn it over for additional questions.
Great, thank you very much. So moving on, let's take a look at the question that has come in. If business has received PPE or EIDL, are they eligible for BNI CARES?
So yes, business that received either the SBA PPP programs, SBA disaster, the Economic Impact Disaster Funds, or other federal disaster funding, if any is available, still would be eligible for the BNI CARES Act. The amount of other federal funding, though, would be netted out of their maximum available under the BNI CARES Act. So it would not duplicate or double dip those funds, but it would not preclude them from applying for the BNI CARES Act funding. The BNI CARES Act funding would be available to help supplement other disaster funding if the business needed additional funding to help cover working capital costs, cover inventory, kind of build up, rebuild the business rolling forward.
Okay, thank you. For businesses that were in operation prior to the February 15, 2020 date, they are in a ramp-up phase but have less than 12 months of op expenses, can we use projections to determine eligible loan amount?
Okay, Dave, would you like to address that one as far as what we're using for records, especially for businesses that you referenced 3 years, but those that don't have 3 years of history?
Yeah, I've been around, was a commercial lender, been around commercial lenders, and it's oftentimes lenders will say that commercial lending gets to be more of an art than a science at times. This is one of those times. What we're looking for in a business to the question that's ramping up, they don't have a full year of expenses, is looking at what their operating expenses are, what those averages are, on a reasonable basis, based on what they were their operations were up to that date. Again, we're looking at BNI CARES Act funding for their working capital needs going forward while they're getting from here to there, and there being a normal business where their business was going to be. So if they don't have the full year or 3 years of experience, use what they have generated and have used as operating expenses to make a basis and a determination for what they're going to need going forward. So as long as you can document and justify the dollar amounts that you're using, that's part of your application. That's part of what we're going to be reviewing and looking at.
Great, thank you. I'm going to take one more question, and then I notice we're getting close to the end of our time together. Mark, I want to make sure you have a chance to wrap it up. So let's take one more question, and we can come back to these after you've done that, if that sounds okay to you.
Sure, it sounds great.
So can the USDA guarantee a draw loan, or a loan that allows you to draw funds only when you need them?
So yes, the BNI CARES Act requirements are that the loan be set up for draw. Generally, we don't have, in our general standard program, have restrictions as to how and when funds are drawn. But for the BNI CARES Act funds, we want those funds to be drawn as a business needs them to work forward. Again, the amount of a loan should be based on a forecasted need. Of course, that's a forecast. So then month to month, the business should work with their lender on actually drawing funds as they need the funds. If something happens where either they didn't need the funds to work forward, they overestimated, your funds can be either canceled or basically repaid, reimbursed back to the loan. Or if a business actually needs more funds, they could, as Dave mentioned earlier, could reapply for a second loan or an add-in for additional funding. But again, we are expecting and asking that the loans be set up on a draw basis, on an as-needed basis, so yes.
Okay. In that case, let's take a pause from the questions. And for those of you who may have to leave right when we're scheduled to end, a reminder that you will receive the link to the recording and the PowerPoint slides. For those of you who are able to stay, we will address some more questions after the close of this. So back to you, Mark.
Okay, so to kind of wrap up the actual presentation as far as the slide deck, I'm just going to show a couple of references for some resources and links. Mainly these are off of our website or reference from our website. So on this slide, the first two, the regulation and the notice of funding availability, those links are actually to the Federal Register. So these are where the two are published. So again, under the regulation link, if you have an interest in making comments to these rules that we're talking about, that is available. Again, comment period is open up through June 22nd. Simply utilize this link. It'll take you to the Federal Register, and on their page they have basically a link into the public comment piece for that. The bottom part of this, the website, is a program page that we created for the Business and Industry CARES Act program. This website does include kind of a walkthrough of much of the information we're talking about here, kind of a fact sheet format. So we encourage you to take a look through that, just to, again, pick up the highlights and the reminders for the program. That web page also has some additional links associated to it. There is a button to go to, a link that takes you to the eligible area identifier. So there's a big button to hit, and that just it works by taking an address. Just type in the address of your business, and it will respond back as if the address is eligible for the program. The program website also has links to the application materials and application information. Under the guarantee program, when we speak of an application or an applicant, we're really referring to the lender. So the lender is our applicant for the guarantee, submitting the application to us. Of course, the lender needs information from the borrower to prepare that application package and work forward. So our, as far as the form and the drive of our format of applications is pretty clear cut, but the application forms are available from that website. I'm also going to flip one more slide, a couple more websites or references. We referenced, as Aaron talks about, that the applications will be processed at our field office, state office level. So it's the rural development offices, USDA rural development, will be accepting and processing applications. So this top website is a listing of all our offices. Each of our offices also have a website set up. So simply click on the state you're interested, where the business is located. That'll then show all the contact information for their programs and basic contacts for staff regarding the business and other programs. If you have interest in other programs within rural development, most of our programs are delivered through the state office structure, so you may also feel free to reach out to them to roll forward. And last on the slide, we have, I guess we missed mine, but we have Aaron and David's email address for follow-up. If you have any other questions or concerns, discussion topics that we missed, you'd like to touch base with us. But we strongly encourage you to reach out to our state office staff, get to know them a little bit. We've already had 2 webinars with them, bring them up to speed on all this information. They can answer questions, I think, just as well as we can now regarding this program. Okay, with that, I am going to wrap up and turn back to Kate. Do we have maybe a couple more questions we can take while we still have a significant audience here with us? Kate?
Yes, we do. The deadline to receive applications is June 22nd, 2020. However, the program will be open to September 30, 2021. Can applications be received after June 22nd?
The actually June 22nd date is an error. And we went back, as it should be, if you go back now to our website, that's been corrected. The June 22nd date is the deadline for comments to the rule, not the deadline for the applications. There was some confusion when that was created. So again, the June 22nd, 2020 is the deadline for comments to our rule for the program. Applications will be accepted ongoing up to the point that either one, we run out of funds and funds are all utilized at the $950 million level, or up to the end of the fiscal year, 9/30 of 2021. Okay.
So thank you for that clarification. Would refinance of an existing bank line of credit used for working capital be eligible under this program? And would it be subject to the 50% cap of refinance of a bank's own debt?
So the 50% cap of refinance would not apply to the B&I CARES Act program. So a bank, let's say if a borrower received a loan from a bank after February, mid-February, and that loan was used for working capital purposes, for eligible purposes for the B&I CARES Act program, then that is eligible for refinancing. On lines of credit and others, I know that, I'm going to say, Dave, there are some other questions on refinancing and structures. Do you want to maybe address some of the other guidelines regarding refinancing?
Yeah, this is a kind of one of those case-by-case basis things. You have to look at when the line of credit was open and extended. So the B&I CARES Act program says the loan must have been closed after February 15th of 2020. So if you've got an existing line of credit that came into place in September of 2019, refinancing that debt would not be eligible. What we're looking at going forward, however, is the ability of the B&I CARES Act program funds to be able to make payments required on that existing line of credit going forward. So we're also looking at any loan that the borrower has, making principal and interest payments on those loans during the time they need to recover from the coronavirus economic impacts. So that would be in your forecast of the dollar amounts needed for the B&I CARES Act loan.
Next question, is there a minimum amount?
A minimum loan amount? No, we do not.
Is there a minimum loan amount?
Right, we do not have a minimum loan amount. Again, it's up to the lender and borrower as to if they feel that this program is something that can serve their needs. We could accept that. We generally do not work with the very small businesses, though we do have some very small loans that lenders are interested in with the program. So there are between SBA, our business and industry programs, the B&I CARE Act program, and for ag production, the FSA programs. There are different options to look at, but our programs do not have a minimum loan amount.
Okay, good. Does the CARES Act B&I loan count toward the maximum eligible loan amount of $10 million for the borrower or the guarantor limit of $50 million? And will the administrator exception be waived?
Well, so that's obviously coming from a very experienced lender in the B&I program. So there are a couple of issues being addressed there that relate to the regular B&I program. So generally in B&I, a loan of more than $10 million, loan request of more than $10 million, would require that it be a high priority loan. In essence, that's where the administrative exception would come in. And we have a limitation of the guarantor. A guarantor can be a primary guarantor on only up to $50 million of total loans if they're involved in different businesses or different loan activities. Those restrictions do not apply to the B&I CARES Act program. So if there's an existing borrower or an existing guarantor under the B&I program, and they're now applying for the B&I CARES Act, those would not be restrictions. Where there may be some challenges with it is if we have a new borrower coming in and is applying for basically a co-funding of a B&I program for some refinance or some equipment and real estate financing, and the B&I CARES Act program for working capital kind of at the same time. You know, if it's all new to the B&I program, then those restrictions would still apply to the standard program part of it. So it's, again, as I think as Dave mentioned earlier, sometimes we have to be a little bit artistic in structuring some of this rolling forward.
Thank you for that. Will this be on a first-come, first-served basis?
Yeah, so generally it's on a first-come, first-served basis. And by that we mean it's to, you know, the complete applications ready for processing. We do have basically a data system that our field offices will be using. So when they receive applications, they're entered into the system. And that way we will be able to monitor the amount of applications received, the demand for the program. It'll be on a first-come, first-served basis up until the point where once we're more restricted in remaining funding, if it looks like we're going to receive more applications than funds available, then the applications pending at that time will undergo a priority scoring process. And the priority scoring is addressed in the standard B&I program. We'll use the same process to do a priority scoring. But again, that will be only, in essence, at the end as funds are becoming more restricted and when we realize that we will not be able to serve all applications on hand.
So that ties well into this next question. Do projects still have to meet priority score requirements, be a high priority project, if they want to apply for more than $10 million?
So again, for the B&I CARES Act program, no, they do not. So any loan request we can work up to, you know, the maximum of $25 million without regard of priority score. The same thing on the guarantee percentage. Our standard program you know, would not provide a 90% guarantee for a $10 million or more. We can and will do so with the B&I CARES Act program.
Okay. Are dairy and poultry farms eligible under ag production?
Right, so any ag production could be eligible as long as the request is either more than what they could receive from an FSA guaranteed loan, or they are otherwise not eligible for FSA. So any type of production agriculture would qualify. Would also include contract growers, could be a processor that also is working, has some production activities or contract production, so some combinations of some vertically integrated operations would also all qualify for the B&I CARES Act program.
Okay. Can we include closing costs for regular B&I loans in a B&I CARES Act program loan, since closing costs are considered working capital purposes?
I don't think we thought of that one. Dave, what do you think? So I think they're proposing using both the B&I program and the B&I CARES Act program at the same time. Can we show all the closing, kind of the loan costs of the B&I loan as to a working capital need under the CARES Act loan?
Well, if you're getting a regular B&I loan to purchase equipment, purchase real estate, that's really not in line with a working capital expense to recover from COVID. So I would say generally no, just right off the top. But
right,
you know,
good point.
Yeah.
Yeah. So the kind of the overarching requirement is that the B&I CARES Act funds be used to recover from the pandemic. So if that's what the working capital, but we're using the regular B&I program for expansion or other activities, the costs related to that would not be eligible for B&I CARES Act. costs with the B&I CARES Act loan, yes, could be included in the B&I CARES Act loan.
Okay. Thank you for that clarification. If FSA denies an ag producer for a loan that is under the FSA lending limit, can the ag borrower apply for a B&I CARES Act loan? The reason for denial would more than likely be cash flow because of low prices and the FSA requirement to pay all working capital back each year.
Right. So if the denial is based on a cash flow restrict or concern, and due to the terms of the B&I CARES Act working capital loan, with the longer repayment term, that resolves the cash flow constraint, and the producer can show they do have repayment for the B&I CARES Act loan, then yes, that could be a reason that they're not eligible for FSA, but are eligible for the B&I CARES Act program.
Good, thank you. Can the loans be sold on the secondary market?
Sure. The B&I CARES Act program would follow the same as our standard B&I program. Can be sold on the secondary market. Just as a reminder, we require that the loan be fully funded, fully dispersed before it's sold. But it could be sold on the secondary market while it's in deferral stage. That's not a restriction for us, as long as the loan is not past due or delinquent or other problems with the loan. As long as it's in a current status, it can be sold on the secondary market.
So will the loan be eligible for sale while it is on P&I deferment?
So yes, as long as it's a structured deferment, in other words, structured when the loan is originated and closed. So over the first 3 years, we are able to concur in a deferring of principal payment. So during that period, yes, the loan could be sold on the secondary market.
Okay. Can we backdate an appraisal for specific property values based on current cash flow? An example would be a hotel. Could we backdate the appraisal to January 1, 2020?
Well, I'm going to turn that one over to Aaron. Aaron is putting your processor and reviewer hat on. What do you provide for guidance on that question?
I don't know if we foresaw that one either. If there's a current appraisal that's happened, in this case, it was January 1st, 2020. If there's one that's happened since then, I don't know how we could not look at the current appraisal that they have already. I don't think we can backdate an appraisal.
So it has to be based, we're not asked, if there's an existing appraisal, Dave, and maybe Dave, you can fill in the details here too a little bit, an existing appraisal within the last 2 years, that's
correct.
Acceptable.
Absolutely.
If it's more than 2 years old, then do an update in that sense, yes. Dave, do you have more to add to the issue or the question?
No, I think Aaron's correct, and I don't know about backdating appraisals, but lenders do have to look at, what's the market value of that property. And I don't know why you'd want to go back and backdate an appraisal, especially if you get into based on cash flow. I'm thinking you're looking at a hospitality property that may only have 20% occupancy now when they typically have about 80%. But what we're saying in the B&I CARES Act program, give us a current appraisal for that value, and then as in our regular B&I program, the lender has to be able to support that value. So this is what I'm basing that value on. If you have an appraisal that's less than 2 years old, again, that's an acceptable appraisal to us. If the lender chooses to have an updated appraisal, we would go with the newest appraisal.
Okay, thank you. I'm sorry, my list of questions just kind of disappeared. So give me just a moment to scroll and get some of them back. Well, it looks like we're actually getting pretty close to the end of the list. It looks like I've got another couple here. What about states that do not have a lending authority and processing time for applications?
Hey, Aaron, you want to talk a little bit about, especially for lenders that aren't familiar with our structure and program as to what that means and what we're putting in place for assistance going forward?
Yeah, thanks, Mark. So those of you who are not familiar with our program, our state offices typically have separate tiers of lending authority. Some have 5 million in lending authority, some have 7.5, others have 10. When there are vacancies in those offices, those authorities are brought back to the national office, and all of their loans come through the national office. What we've done over the last several weeks, probably since March, is that we've given a number of states temporary approval authority so they can respond to the influx of applications that are coming in to respond to the COVID-19 pandemic. Most of those approval authorities run through July 31st of this year. We've reserved the right to extend that if necessary. We're also have some processes that we're putting in place that allows us to process applications faster here in the national office and give some of our state offices some more assistance if they need it. We do anticipate that there will be a number of applications coming in, and so we're looking at a variety of different ways to make sure we're able to process those applications as quickly as possible, including giving temporary authorities in a limited fashion, no more than 5 million to those states that do not have authority right now.
Good, thank you. So we're going to take 2 more questions and then we'll wrap it up. Will B&I CARES Act program applications be prioritized above standard B&I program applications in terms of rural development state office processing?
Is that another Aaron question?
You want to talk, Aaron, and I'll maybe speak to a little bit on some support we have. But yeah, please start off with it, and I'll add in.
Sure. No, I do not foresee us prioritizing B&I CARES Act loans over regular B&I applications. Our goal is to run both programs concurrently and give them both equal priority as applications come in.
Right. I'll just simply add that.
Thank you.
Yeah, the B&I, the CARES Act itself, I should say, provided some additional administrative support funding for the agency to support the B&I CARES Act. So in that way, we'll have a little bit additional support. So if we do have state offices that have a backlog of both programs or other programs in the B&I CARES Act, we'll be able to offer some additional support to help out. And that's also what Aaron was speaking to earlier as to looking at other resources of kind of being able to share the workload a little bit, across states or across our national team and state teams to help monitor to make sure that we don't have, a backlog of applications. Okay?
So our last question then is, if a REAP guarantee was recently approved but not funded yet, does that REAP amount have to be included in aggregate with the CARES guaranteed amount?
Can you read that one more time, Kate?
Sure. If a REAP guarantee was recently approved but not funded yet, does that REAP amount have to be included in aggregate with the CARES guarantee amount?
Okay, so what the question is referring to is, yes, another program that we administer is the Rural Energy for America program, also a guaranteed loan program. But that is a separate program with its own lending authorities. So we do not aggregate between loan amounts between the REAP program and the B&I or B&I CARES Act programs. So if a borrower has an existing REAP program, the Rural Energy for program, that would not impact their ability to access the B&I CARES Act program. So unless, Aaron, do you have anything to add to that?
No,
you do a lot of
Mark,
work within the REAP.
Yeah, no, Mark, I think you hit the nail right on the head there. This wouldn't apply for REAP, so I think we're good there.
Let me go, if you don't mind, let me ask one more question. Will the balloon interest payment after deferral and or the 50, will that be allowed to advance? Go ahead, Dave, go ahead with that.
No, you can finish the question, but BPS is basis points. It's 0.5%.
Thank you. Will that be allowed to be advanced from loan proceeds? It will be difficult for some businesses to make that initial payment of 12 months of deferred interest along with the 50 fee. Sorry, couldn't hold it in my head.
Right. So Dave, you want to address that?
Yeah, thank you, Mark, and thank you, Kate. BPS, we would be in the question, so obviously this is a lender basis 0.5% guarantee fee. The answer is yes. Any payment, any loan payment that the borrower has projected for their recovery period, and it may be up to a year, it may be longer than that, any loan payment is forecasted in what their working capital needs are to recover from the pandemic. So if it's going to take them a year to recover, then certainly the interest expense on a B&I CARES Act program loan would be part of their working capital expense.
And one thing I would like to add as a final reminder, we will be sending out the link to the webinar recording and the PowerPoint, and you will also see these questions reflected as time goes on, and perhaps in an FAQ. They will also be answered individually. There were a lot of them. Thank you so much for your engagement, and thank you for joining, and back to you, Mark.
Thank you, Kate, and I'll just wrap up again. Yes, it was great to have the interest in the program and all the attendance here. Additional questions coming in. I'll just remind as to going forward, if you have questions, discussions on the program, feel free to reach out to our state office team. Our state office staff members are knowledgeable of the program, very active in the B&I programs, and are always willing to kind of talk through proposals. So you don't need to submit an application to start asking questions. Feel free to reach out. If you have any challenges in reaching somebody, again, just let us know, and we'll be happy to connect you with the right team and right team members that are our field office structure. Always available to help answer questions and talk through potential proposals or potential applications kind of rolling forward. Okay. Again, with that, I think we're going to wrap this up. We appreciate your attendance today. Glad to see your interest in the program. And again, if you have any other questions or follow-up, just let us know. Okay. Thank you all.